What you know about chilling in the back of the bug? What you know about rolling in the back of the bug? We pull up with pulls in the back of the bug. Them honeys getting all lit in the back of the bug. In the back of the bug, in the back of the bug, yeah. Just imagine the back of the bug.
Yo, what's good, guys? It's your boy Governor Gus back in it again, trading Gutney, trying to teach our people how to make that bag. My only priority is making that bag. Anyways, today's topic will be a little bit unique from the previous topics I've been focusing on, because I'm not really focusing on liquidation or imbalances. Today, I'll actually be focusing on using time. To be more specific, using time to predict the market movement, and also to basically use time to get a weekly bias or a daily bias, or basically using a range of times within the week to basically have a more accurate and more effective weekly bias or daily bias, depending on how you use the strategy. But anyways, let me just get straight into it. So today I'll be focusing on using the Asian ranges. For those who aren't familiar with the Asian ranges, basically the period between 2 a.m. to 7 a.m. with you labeling out the highest and the lowest point between that time period, and that would be your Asian range. And what you'd expect is that price is to respect, if not follow, not really follow per se, but respect or get rejected at certain levels that are provided by this range, to be more specific. But anyways, let me hop right into it. Where was I? I was making the money. Okay, so the Asian range would typically consist of the high and the low, like I stated, and it would be from the period of 2 a.m., which is marked by this black line over here, till around about 7 a.m. Not around about, exactly on the dot 7 a.m. This also being South African Standard Time, for those who don't, or for those who are also trying to understand what time slot this is. And another thing about this strategy, or using time in general, is that it also outlines potential opportunities like this, where you can get clean entries with proper depth or pips per se. Let me just change the color there so you can actually see it. And with that said, this is all basically determined from just knowing this time slot here, and also knowing the characteristics of certain time slots like the London session open kill zone, which is usually from around 8 a.m. to 12 p.m., where usually reversals like this occur, or trend continuations like this also do occur. Because from around 12 there was consolidation. I would say the trend continuation came from 2 o'clock, but the trend was technically or generally reversed from 12, if you do understand what I'm saying. Okay, so just to get back into it and not to get off track, so you need to just basically label out the Asian range 2 a.m. till 7 a.m. high and low, and from that you'd get two levels, this being the Asian high and the Asian low. If you are more advanced, you'd actually get or put a middle level, but that's not really what I'm trying to teach you yet. This isn't a line that I put in. This is actually another Asian session range from the analysis that side, but let's carry on this side. As you'd see, the characteristics of using the Asian range is that when price drives, breaks the Asian high, you'd expect it to retrace back into the Asian range and then break out, and occasionally it will also retrace back, but as long as it doesn't break the Asian low, like here, this line right here, and then you wouldn't have any problem at all, and then you'd expect that to actually be an uptrend as long as it hasn't disrespected the Asian low after penetrating the Asian high. From there you can see that price basically drove up at around this point, and from around 10 to 11 price got reversed. This is being the London open kill zone, and it also got reversed again at around 12 o'clock there. That initially drove price up, setting a high. After setting a new high, price consolidated around about there, setting the Tuesday's Asian range, which you can see is higher than Monday's Asian range, just to label that out. And it's also shown by these lines over here. Let me just try to put them on right now. I'm sorry that it's taking some time, you know. I ain't flash yet. Damn, man. The machine decided to come back on, man. Keep quiet, keep that fan down, bro. I'm trying to make niggas money up in here, bro. But anyways, let's get right into it. As you can see, 2 a.m. around about there till 7 a.m. there. The high and the low, and you have your Tuesday's Asian range. And from this one you can see that it was higher than Monday's, as I already have stated, and that also basically just plays a significant role. I'll show you further on, but pretty much it would have stated that it was an uptrend for those who just looked at the 2 days. But for those who actually just let Tuesday also join, you would have also noticed that it wasn't an uptrend. Let me explain why it wasn't an uptrend now. As you can see, just like Monday, price broke the high. Price broke the low instead of the high, retraced back into the Asian range, and after retracing, it broke out. It retraced back in again, and after retracing the second time, it shot out. I'd say this is now the complete opposite of what happened on Monday, where we can see that price broke the high, retraced back into the Asian range, and after retracing back into the Asian range, it thereafter went out and then retraced again and then shot out. As you can see on Tuesday, it's the complete opposite. Price broke the Asian low, retraced back into the Asian range, broke out again, retraced back in, and then shot out. I'd say the significance with this one is that as price shot out, it actually went back into Monday's Asian range, which is shown over there, or which is that one right there, where price actually broke Monday's Asian high first and thereafter tried to break the low, and after trying to break the low, it got rejected and then shot back up, basically showing us that price was being respected and that the Asian high wasn't really meant to be broken at that time. But as you can see, after price shot up, it consolidated and then finally created a new high, and after creating the new high, it basically created the Asian range per se, with a little bit of consolidation and retracement inside it. And then after the Asian range, it basically repeated what happened on Tuesday. Broke the Asian low, retraced, and then this time it just went out straight. Just like Tuesday. Attacked the Asian low first, retraced, and after retracement This one retraced twice. On Tuesday, it retraced twice. On Wednesday, it just did it once. And after it did it once, it actually went out with a pretty balanced volume movement that was steep per se, rather than Tuesday where it actually just shot price down with a lot of imbalances and then shot back up. So this time around on Wednesday, it shot down, retraced for a little bit, if not got reversed over there to be more specific, and then retraced after that, and then continued the trend down. But this time you should notice that as it was going down, we then broke Monday's high, just like we did on Tuesday. And this time we successfully also break Monday's Asian low without any rejection or any major rejection, and then price drives back, consolidates somewhere in between the Asian range and above it, and after consolidating it shoots up, and after shooting up creates the Asian range, sets the high and the low, which is now Thursday if I'm not lying. And as you can see, Thursday the price was a little bit tricky per se, but I would say it does low-key imitate the same patterns as Wednesday and Tuesday. If I had to look at that as a similarity, let me just change the color. Yeah, it just looks a bit disorientated, but I'm pretty sure y'all remember the pattern over there. But anyways, we see price drive towards the Asian low. No, it drove towards the Asian high first actually, and then after driving towards the Asian high, it tests. There was a small retracement, and then it continues the trend. It tries to test the Asian low for Friday again, and then it bounces off because of rejection. As it's consolidating again and accumulating, it tests the Asian low for Friday and then bounces off again as it is rejected. And this time it actually moves with a lot of volatility going down. So from there we can see again that the ranges are basically playing in between Monday's high and low, if not Monday's Asian ranges high and low to be more specific. And that would have also given you more information in terms of how to execute, because you generally know that every time it touches the lower there is major rejection, and this time around it was rejection, but it seems like it was moving towards the sell side liquidity. And from that said, there was accumulation and consolidation until finally Friday's range was created. And from Friday's range we can see that the market first takes out the Asian low, and then after retraces and then takes out the Asian high, and then straight after goes back into the Asian range and then takes out the Asian low with a lot of volatility towards the sell side. This is a bit more complex of a pattern, but if you do get familiar with it, you would know that as soon as it went above the Asian, the Asian high, and it retraced and it didn't actually penetrate the Asian low, it would have been a bullish scenario. But in this case it penetrated and went down, so it became a bearish scenario. For most traders who would know that, I'd say it's basically the opposite of this one. Yes, exactly, where price basically retraces around about there, but instead of penetrating and breaking the Asian low, it actually bounces off and goes back up. So if that were to occur at this scenario, then we wouldn't have this pattern down here. But as you can see, whenever it penetrates down below first, up above, and then down below again, you must expect price to actually be going towards the sell side, if not a downtrend, if not advise a short position, or having a short bias, a sell bias. And then from that we can see that price accumulated before closing the market, and then next week or this week the market opened a bit higher, consolidated, created the Asian range, and after creating the Asian range we can see that on Monday this week it tested the Asian high, got rejected. No, it actually went down below first. It tested the Asian low first, sorry. What's going on, bro? So we can see that price tested the Asian low first, and after testing the Asian low, testing the Asian low, it tested the Asian high, got rejected, and then actually bounced back. And this time around we can see the total opposite of Friday, how price tested the low, then penetrated the high, and then retraced back into the Asian range, and then continued through the Asian low. Here we can see it's the total opposite. Price tested the low, tested the high, penetrated through the low, went back into the Asian range, retested on both sides of the ranges, the high and the low, and then this time actually went out through the buy side. And from the buy side you can see there was a lot of volatility that actually stopped it right there at last week Monday's Asian low, if you still recall this line over there. And as you can see, price bounces back into the Asian range, tries to break through the other side, it doesn't, it gets rejected, and all that volatility bounces out the Asian high again. But we can see that price goes back in, and this time it slices right through the Asian range for Monday, and it doesn't actually take any time. But that's for another stage, because I'm sure at some stage here there's another Asian range, because this was probably the end of the day market for that time. But this is basically how you would use the Asian range to determine how the week would look like, if not your weekly bias or your daily bias. Excuse me. Jeez. Your weekly or daily bias, from basically analyzing and outlining where all these key Asian ranges are throughout the week, and you'd pretty much see how there is a pattern of where respected levels are in terms of price. Like Monday we could see that price went up to Tuesday, and from Tuesday you could see that price tested the Monday range, and after testing the Monday range it got reversed, if not it got rejected, and after being rejected it set a new high that wasn't really that high. But Wednesday the Asian range was based off of this high, and basically what happened on Wednesday is that price dropped down, and this time the way it dropped down balanced enough to actually break down, if not break down, penetrate through the Asian range for Monday, in which Tuesday couldn't do. So on Thursday you would have known for like 80% guarantee, if not I would have put an 80% guarantee into my bias that Thursday the price was going to be dropping, if not Friday more specifically price would have dropped. And then from Friday on Monday you would have expected price to actually increase. I won't lie, since from Friday we were around about the same level as Monday, if not Monday this week we're on the same level as Friday. But yeah, this is the Asian range, and basically how to use the Asian range to predict market price, have a weekly bias or a solid daily bias. Excuse me. Anyways, giving a cuss, trading cut me, you know, just in it for the pack. Hope y'all niggas are making that money.
Baggy bird, what you know about chilling in the back of the bird? Some money in the back of the bird, hustling in the back of the bird, shooting that shit in the back of the bird, in the back of the bucky. These niggas is hosting a party with all of these homies, it's getting too rowdy.
I could never crash out. I could never crash out over no bitch. Fuck is you talking about?